Home prices in China have fallen to BC-year-old levels. What warning does this hold for India's home buyers? Imagine a family buys a flat by investing their entire life savings. The EMI begins, the home registry is completed, relatives congratulate them, and the family thinks their wealth is now safe. But a few years later, home prices in that same city start falling. Builders' projects come to a halt. Fewer lights are visible in the neighboring towers. People are ready to sell, but there are no buyers. The same home that the family had considered future security suddenly becomes financial tension. The fear begins here, because in India, a home is not just about walls and a roof. A home is the middle class's biggest investment. People break their retirement fund, sell gold, take loans, and tie up the next BC years of income into EMIs. That is why, when news comes that property prices in a big country like China have reached BC-year-old levels, Indian home buyers also begin to ask, can something like this happen here too? And curiosity is born here? What exactly happened in China that real estate, once considered the safest investment, became a source of anxiety for people? Why did the builders who once changed skylines drown in debt? How did a mountain of empty homes get created? And the most important question, how different is India's housing market from China's? And even then, what lesson should Indian buyers learn from this story? China's property story is not a story that broke suddenly. It is like a wall that slowly became weak, where cracks had started appearing years ago. For a long time in China, buying a home was considered the most reliable way to build wealth. People invested a large part of their savings in property. Developers kept launching projects continuously. Local governments earned revenue through land sales. Banks and shadow finance gave money to builders. And within this entire system, the belief remained that home prices would always go up. But when any market develops the belief that prices will never come down, that belief itself becomes the biggest risk. The same thing happened in China. Supply started becoming higher than demand. In many cities, homes were built, but occupants did not come. Developers started new projects with advance booking money and then launched even more new projects. This cycle continued as long as credit was available and buyers' confidence remained intact. Then both policy and the market changed direction. China tried to put a brake on developers' excessive borrowing. Demand weakened. Buyers started becoming afraid of buying under construction flats. Developers' cash flow began to break. Projects got delayed. People became even more fearful. And when trust breaks in a confidence-based market like property, the fall is visible not just in numbers, but in the entire economic mood. Reuters reported in April 2026 that China's new home prices fell again in March, and the annual decline reached 3.4%. The same report also said that weak demand continues to put pressure on the property market, although some big cities showed month-on-month improvement, meaning China's market is not falling everywhere at the same speed, but overall weakness is still clearly visible. While reporting on China's property market, Economic Times said that prices have reached around 2-decade-old lows, and because of this, concern about a similar correction has also risen in India. The same report also said that India's housing market is fundamentally different from China's, because demand in India is largely driven by end-user demand and urbanization, while China's big problem has been oversupply. The importance of real estate in China was not limited to buying homes. According to an Associated Press report, China's real estate sector has been connected to more than 1/4 of the economy's business activity. When such a large sector falls, the impact does not fall only on builders. Cement, steel, furniture, home appliances, banks, local governments, and household wealth all come under pressure. Evergrande became the biggest symbol of this crisis. Evergrande, once considered China's giant developer, became so heavily indebted that a Hong Kong court ordered its liquidation. According to AP, Evergrande was the world's most indebted developer, with liabilities of more than $300 billion. This was not just the failure of one company. It was a warning for the entire model that relied on borrowed money, advance sales, and endless growth. After Evergrande, the troubles of Country Garden and other developers also came forward. Confidence in the market fell, buyers became cautious, and the fear of unfinished homes increased. For many home buyers in China, the most painful thing was that they had made payment for the flat, but the project was not completed. On paper, property investment looks like an asset, but if the home itself is not delivered, then for the buyer, it becomes anxiety, not an asset. The second part of China's problem was empty homes and oversupply. When more homes are built than needed and buyers fall short, prices naturally come under pressure. Real estate is a market where supply cannot be reduced immediately. The towers that have been built will continue standing. The land that has been financed will still carry its cost. The loan that has been taken will still need repayment. And when sales slow down, developers give discounts, which weakens market sentiment even further. Reuters Breakingviews wrote in March 2026 that China's property investment has been in contraction since early 2022, and it has seen 4 consecutive years of declines. In December 2025, a record year-on-year fall of 17% was reported in property investment. This number shows that the crisis is not just about prices, but also about the investment engine stopping. Now the question is, how big a warning is China's fall for India? First, India and China should not be understood through direct copy-paste comparison. In China, property growth for many years was based on state-led urbanization, land finance, massive construction, and investment demand. There is investment demand in India too, but a large number of buyers buy homes for actual use. Urbanization is still continuing in India. Nuclear families are increasing, the aspiration to move from rental to ownership is strong, and there is also a shortage of quality housing in many cities. Momentum is still visible in India's housing market. Economic Times, citing Knight Frank Global House Price Index, reported that in Q1 2025, residential prices in India increased by 7.7% in nominal terms and 4.2% in real terms, and India ranked 15th among 55 markets. This means India's overall market does not appear to be in a broad crash phase like China. But this does not mean that India has no risk. India's problem may be of a different kind. Property prices have increased very quickly in some cities. Demand for premium housing is strong, but stress is visible in the affordable housing segment. Times of India, based on Knight Frank India data, reported that in Q1 2026, sales of affordable homes priced below 50 lakh rupees in 8 major Indian cities fell 23% year-on-year, with fewer launches and input cost pressure cited as reasons. This is the biggest warning for India. If home prices move far ahead of people's incomes, demand slowly starts weakening. A bubble in real estate does not always burst suddenly. First, affordability falls. Then buyers start waiting. Then inventory increases. Then developers give discounts. Then investors try to exit. And if an employment or interest rate shock comes, market confidence can weaken. The first lesson Indian home buyers should take from China's story is that buying a home should be decided not just by emotion, but by affordability. If the EMI eats up a very large part of your monthly income, then the home can become more of a burden than an asset. While taking a home loan, though not only look at how much loan the bank is giving, see whether the EMI can run comfortably even after job risk, medical emergency, income break, or interest rate change. The second lesson is not to ignore location. In China, many homes were built in places where the estimate of future demand was too optimistic. In India too, many buyers buy flats in faraway locations just after hearing future development, where transport, jobs, schools, hospitals, and rental demand are not strong yet. In real estate, future promise is important, but present connectivity and real demand are even more important. The third lesson is builder credibility. In China, when developers' financial health weakened, buyers got stuck.
In India, transparency has increased after RERA. But buyers should still check project approvals, RERA registration, construction progress, builder track record, delivery history, and debt situation. Investing money just by looking at a cheap offer or early bird discount can be risky, especially in under-construction projects. The fourth lesson is that property should not be treated as a guaranteed return machine. Many people in India buy homes assuming that property will never cause a loss. But China has shown that real estate can also fall. Prices can stagnate, rental yield can be low, maintenance costs can increase, and if there is a need to sell, finding a buyer immediately is also not guaranteed. The fifth lesson is for investors. If you are buying a home to live in, your calculation is different. But if you are buying a second or third property only for appreciation, then you need to be more careful. Look at the return after adding rental income, maintenance, property tax, vacancy period, loan interest, and resale liquidity. Many times people put money into property out of fear of the stock market, but property is also not risk-free. China-like oversupply is not visible everywhere in India right now, but in some pockets there can be a mismatch between inventory and pricing. Premium projects sell quickly, but mid and affordable buyers remain under income pressure. If developers keep making only luxury housing and middle-class affordability keeps falling behind, an imbalance can form in the market.
Real estate remains sustainable only when the relationship between buyer income and home price does not break too much. China's crisis was also connected to government finances. Local governments were dependent on land sales. When developers reduced land purchases, local government revenue came under pressure. In India, this structure is not that extreme, but in states and cities, stamp duty, registration, development charges, and construction activity are important sources of revenue. That is why a real estate slowdown can also affect government revenue and local employment. Employment is also connected to housing demand. If the job market is strong, salaries are rising, and young buyers have confidence in future income, then housing demand gets support. But if AI disruption, layoffs, slow hiring, or income stagnation increases, people can delay big-ticket purchases. That is why home buyers in India should keep not just property price, but also their career, stability, and income visibility in mind. Interest rate is also an important factor. When rates are low, EMI feels manageable. When rates rise, the same loan becomes expensive. Many buyers take the maximum possible loan to buy a home, and then a rate increase shakes their monthly budget. China had different dynamics, but the global lesson is that debt-heavy property investment is safe only when the borrower has a cushion. One positive thing in the Indian market is that the regulatory framework has improved from earlier. 𝐼RA has strengthened project registration, timelines, and disclosure. The home loan market is relatively regulated. Banks do several checks in lending. But regulation cannot make the decision in place of the buyer. Buyers will have to read documents themselves, do legal due diligence, and not take decisions under emotional pressure. China's story is certainly scary for Indian families, but it is not a reason to panic. In India, demographic demand, urban migration, housing shortage, and end-use buying still support the market. But the warning is clear. If prices disconnect from income, speculative buying increases too much, and developers create more supply than demand, then correction can come in any market. Now, what should an ordinary buyer do? Before buying a home, ask yourself 3 questions. Is this home connected to my actual need? Is the EMI safe according to my income? Is there real demand in this location, or has the future only been shown in the brochure? If the answers to these questions are clear, then the decision will be strong. If the answers are confused, then waiting a little may be better. China's property crash tells us that the most dangerous phrase in real estate is, it will never fall. No asset class always goes up. A home may be an emotional asset, but the market is not emotional. The market runs on demand, supply, affordability, credit, and confidence. When these 5 things break, even a concrete building can become a financial risk. In the end, the point is that China's property fall is not a direct prediction for India, but it is definitely a strong warning. China relied on excessive construction, too much debt, and the expectation of endless price rise. India will have to avoid this mistake. Buyers will have to look at affordability, builders will have to keep realistic pricing, banks will have to do prudent lending, and policymakers will have to see housing not just as an investment product, but as a need for living.
If this video has taught you something new, or if you feel this information should reach more people, don't forget to like and share the video. Your small share can become valuable and useful information for someone else. If you have any questions related to this topic, or if you would like to share your opinion with us, be sure to write in the comment box. We read every question and suggestion from you, because your feedback inspires us to create better content. And if you want to keep receiving such interesting and reliable information about business, the economy, and the world in the future, then don't forget to subscribe to our channel GRT Business and also press the bell icon so that you get notifications of every new video directly. At GRT Business, we always strive to provide you with accurate, balanced, and reliable information. Our news and analysis are prepared based on information obtained from various news agencies, public sources, and public opinion. We make every effort to verify and validate each fact as much as possible. But in case of any possible error or dispute, the responsibility lies with the respective sources. Our only aim is to present you with a correct and trustworthy perspective so that you can understand any topic better.